Charities Annual Report and Accounts. My name is Tracy Bird and I run SCVO's Trustee Network. We're able to run these free lunchtime webinars through the support of a CCLA, who sponsor the Trustee Network. CCLA are the UK's largest charity fund manager and are also sponsoring next week's Trustee Week conference, which we're running in Edinburgh on the 5th of November. So thank you for coming along today. And while people are still joining us, do take the time to introduce yourselves in the chat and maybe tell us a bit about your experience of preparing your annual report and accounts. We've got closed captions enabled on this webinar, but you can turn them off at the bottom of the screen. And as you'll have noted, we're recording the presentation part of this session, but not the questions afterwards. So if you've got any potentially difficult issues you'd like to discuss with us and you'd rather not do that in a public forum, then you can get in touch with us afterwards and we can set up a one-to-one session. Also to note, we're going to send out all the slides to you afterwards and any links to further resources that are mentioned today in a follow-up email. But, you know, we want to make this as interactive as possible and you to learn as much as possible. So do put your questions in the chat and we will have time to look at these at the end. So your annual report and accounts is a great opportunity to showcase your organisation's work and provide a clear picture of your activities and your financial position. And to help you make them the best they can be, I'm delighted to be joined today by the Scottish Charity Regulator's Accounts and Annual Returns team. So we have Claire Morrison and Alison Adams, and I'm just going to hand straight over to them to take you through their presentation today. Thanks.
Hi, can everyone see that okay?
Yeah.
Yep. Okay, so yeah, I'm Claire Morrison. I'm the Accounts and Annual Returns Manager at OSCR, and today we're going to talk to you about improving your charity's annual report and accounts. So we're going to talk to you about the findings of our recent monitoring work, which involved analysing a sample of charities' accounts. We're going to start with a reminder of what charities are required to submit to OSCR, and then we'll just give you a brief explanation of the work that Alison and I do within the organisation. And we're then going to explain the 4 key findings from our work, the issues which arose, and where improvements can be made. So a brief reminder of what charities must submit to OSCR. All charities are required to prepare a compliant set of accounts each year, and this will either be a set of receipts and payments accounts or a set of fully accrued accounts. Receipts and payments accounts are the simpler form of accounts which are available for charities with income of £250,000 or less and which are not limited companies. Fully accrued accounts are required for all larger charities and also charitable companies regardless of size. There may be other factors which lead to the requirement of fully accrued accounts, such as a requirement within the governing document of the charity. Charities must, as part of their accounts, include a trustee's annual report, and all charities, regardless of size, must have their accounts independently scrutinised, and this will be either in the form of an independent examination or an audit. All charities must then complete the OSCR online return, which they can access from our website. The online return has questions which are appropriate for their charity, so these might be different depending on the size or type of charity. At the end of the questions, they'll then be able to upload a set of their accounts. The OSCR online return must be completed and accounts provided within 9 months of the charity's financial year end. So what monitoring work do Alison and I undertake? So we undertake targeted work on the returns and accounts which are submitted to us. We don't check every set of accounts which is submitted to us. There's 25,000 charities and only 2 of us, so we don't really have the resources to do so. We recognise that charities who are new may have more difficulties in preparing the accounts than those who've been established for some time. So to try and ensure that we offer support as early as possible, we review a proportion of the accounts from charities submitting to us from the first time to make sure that they're getting it right. We also undertake risk-based reviews on groups of charities. This can be based on the work that the charity undertakes or information that charities have provided to us through their annual return submission. We also review the accounts of charities which have been marked internally for a review. So if there's been an inquiry into a charity, an inquiry officer might like to see a review to see that recommendations have been followed. Alison and I might mark accounts where we look at them and we've identified a compliance issue. We'll notify the charity and then review the next set of accounts just to check that they've undertaken the work that we've advised them to do. And sometimes we receive a status application where a charity tells us that they're going to undertake specific activities in the future, and we might review the first set of accounts or following sets of accounts just to ensure that these activities have commenced. And finally, we undertake random sampling of accounts, which allows us to capture those charities who we might not otherwise review in the course of our work. In our most recent set of random sampling, we reviewed 60 sets of charity accounts. The sample is representative of the charities on our register, so that means we look at a higher proportion of smaller charities in line with the split on our register. We undertake a holistic review of the accounts, so we're not just looking at the accounts in isolation. We also look at the governing document of the charity and other information that we might hold, such as any open files that we may have. We do a general check of accounts compliance to check if the accounts contain the required components, are in a form that is acceptable, and that the accounts themselves balance and agree. We consider the governing document of the charity and if the information in the accounts is consistent with that. So is the charity operating with the correct number of trustees? Are they having the correct level of external scrutiny undertaken? And are they preparing the correct type of accounts? We also consider the activities of the charity and whether they're undertaking activities in furtherance of their purposes. For some charities, we don't see much activity being undertaken, and so we might need to contact them just to understand what they're doing and what they intend to do. For others, there may be activities which don't seem to align with their purposes, and we may need to contact them in respect of this. In this particular sample, we considered the reserves policies for charities. We considered whether the charities had reference to a reserves policy in its accounts and the quality of this. We also checked if charities recorded the level of reserves they actually hold, and also if any comparison was made between the required level of reserves and the levels which were held. So what were our key findings? We had 4 key findings in this set of random sampling. Firstly was the quality of the trustees' annual report. We found that this is an area where charity trustees are not always getting it right. Some charities don't include a report at all, and some have a report that's lacking in the information. We also found that some charities are not including comparative information in the accounts. The reserves policy, although often included, lacked detail and failed to demonstrate an understanding of the financial position of the charity. And we also found that in some cases, the charity was not following their own governing document. So we're going to go through these areas in some more detail so you can better understand how to get these areas right. The trustees' annual report is a key component of the financial statements. Firstly, it's a legal requirement. The Charities and Trustee Investment Scotland Act 2005 requires that the charity prepares a statement of account, including a report on its activities in the financial year. It's important, though, that the charity trustees understand that the trustees' annual report is an important tool to allow them to tell the story of the charity. They can use the trustees' annual report to provide narrative, to explain what the numbers mean. This will allow them to really explain what the charity has achieved in the year. They can show the difference that they've made through the activities that they've undertaken and help users to properly understand the work they have been doing. Providing this information will ensure the charity is operating transparently and allow funders and beneficiaries to understand where funds have been spent and what's actually happened during the financial period. There are required elements of the trustees' annual report which are set out in the relevant legislation for both fully accrued accounts and receipts and payments accounts. It must contain details of the objectives of the charity so that it is clear what the charity was set up to do. The charity should then set out the activities which have been undertaken, clearly linking those back to the objectives. The information in the trustees' annual report should be consistent with the financial information, and it should help make sense of the financial information and add context to the figures. Charity trustees should ensure that they are meeting the requirements of the legislation, but also allowing the story to be shared appropriately. A good trustees' annual report can be really beneficial to the charity trustees. It helps the charity trustees be focused on their charity, ensuring that they are meeting the objectives that they were set up to do. Charities can be susceptible to mission creep, where they start operating in a different area after identifying a need without carefully considering if this aligns with their objectives. The completion of the Trustees' annual report each year provides a point for the trustees to properly reflect and consider the activities being undertaken. It can also provide clear information to stakeholders on what the charity is doing and demonstrate how well the charity is being run. This is important when trying to obtain funding from stakeholders, as it can provide them with reassurance. It also provides assurance to beneficiaries that the charity that they are using is being appropriately governed. A good Trustees' annual report will also provide OSCR with the information that we need. As regulator, we need to understand what the charity is doing, and if we can get this information from the Trustees' annual report directly, it might mean that we need to be able to close off a query without contacting the charity. In some cases, a Trustees' annual report can also help to deflect bad publicity. Charities are there to benefit the public, and there is additional scrutiny on their activities. It's inevitable that there'll be an occasion where a beneficiary or other stakeholder is not satisfied with the activities of the charity. A good Trustees' annual report properly telling the story of the charity may help to quell rumours and speculation about the charity. So what are the top tips for preparing a Trustees' annual report? It is really important that the Trustees' annual report tells the story of the charity. The trustees should use the Trustees' annual report as an opportunity to showcase what the charity has achieved in the year. Charity trustees and their advisors should be really clear about what's required in the Trustees' annual report. Too often we see a report which is a chairman's report or a small amount of narrative and doesn't contain all the required elements. Familiarisation with the requirements is really important. And it should be the trustees who lead on the Trustees' annual report. They may be provided with the headings from their accountant or advisor, but they should be the ones who reflect on the activities the charity has undertaken and the story that they want to tell. Depending on the size of the charity, they may want to engage key staff in the process as well, but they should be the ones overseeing it. And the Trustees' annual report should be appropriate to the charity. The narrative should be clear and explain the key facts. If possible, diagrams, charts and pictures can be used to help to tell the story, and it may be appropriate to consider using individual beneficiary stories or feedback. But the Trustees' annual report should be relevant to your charity and your story. And finally, on the Trustees' annual report, don't leave it till the last minute. Information may take time to collate, and you may want to engage with staff and service users, so give yourself enough time to do this. It shouldn't be left to one individual. It's the collective duty of the charity trustees, and you should ensure that all trustees are given the opportunity to input. The Trustees' annual report should be easy to read and understand, so try not to use jargon or technical terms which might not be understood. One error we commonly see is the Trustees' annual report being duplicated from previous years without being considered and updated. The information needs to be properly reviewed each year, and whilst there might be some information that's still relevant, the work that the charity has undertaken in the year needs to be relevant to that specific year. And finally, there will be time when things don't go to plan, and it's important that the annual report doesn't just recognise the successes of the charity, but also acknowledges where things need to be worked on. It should include reflection on all the charity's activities, and if a project hasn't been as successful as it could have been, then this should still be included and explained. Moving on, another area we saw omissions was the comparative information in the accounts. Both receipts and payments accounts and fully accrued accounts require comparative information for every figure which is presented in the accounts. This means that the information about the previous year must be included for every figure. Comparative information is important as it allows the users of the accounts to compare year-on-year figures. This means they can easily understand if there have been changes to income levels or expenditure levels. It also means it's easier for those preparing the accounts to spot mistakes. Large fluctuations can indicate that an error has been made, and this can be helpful in ensuring the accounts are correct. In addition, it helps to ensure that the figures reconcile year on year. Including comparatives means it's easy to see that the correct bank balance has been carried forward, and this helps to ensure the accuracy of the figures. And Alison is now going to take you through the reserves and the governing document.
Good afternoon, everyone. An area we concentrated on specifically in this sample was reviewing what charities told us about their reserves policies and the reserves that they hold. So what are reserves? They're the funds that a charity has which can be freely spent on any of its charitable purposes. The free reserves of the charity do not include any restricted funds, endowment funds, or tangible fixed assets held for the charity's own use. This is because they are not available to freely spend, as they are either tied up in the assets of the charity or they can only be used for a much narrower purpose. When looking at the reserves, it is really important that the charity trustees understand the free reserves available and don't think that they have more available than they actually do. So why are reserves so important? Having money in reserves is a critical way in which the charity can be resilient to challenges that are presented. For example, an unforeseen change to its funding or income that has a significant impact on its ability to deliver services. This was particularly pertinent when charities were forced to close unexpectedly during COVID times. Many charities at that time had to use reserves to meet their fixed expenditure when they couldn't open to provide their usual services. So having reserves provides flexibility for the charity to adapt to changing circumstances and situations. Having money in reserves also helps with planning for the future, whether that involves making plans to start a new activity or changing the way in which an existing activity is being delivered. It can also help with financial budgeting by providing a cushion which can be used in certain circumstances. So now we have talked about what the reserves of the charity are and why they are important. We can now talk about the reserves policy. A reserves policy is there to explain the level of reserves that the charity trustees consider is appropriate for their charity and why. In developing a policy, the trustees need to really think about their organisation, its activities and beneficiaries, where it is potentially vulnerable, and therefore what reserves it needs in order to function in a way that manages the risk of activities or operations being adversely affected by unforeseen circumstances. Trustees need to consider the amount of money that they need to hold as a buffer to allow them to continue their activities or to wind up appropriately if there are significant unexpected changes. The reserves policy should clearly state the level of reserves which is required by the charity. This may be in absolute terms, or it may be in terms of monthly expenditure. The amount of reserves which will be required will vary significantly throughout the charity sector. There is no right or wrong answer when setting the level of reserves in the reserves policy. There is no one-size-fits-all approach. A very small charity, for example, which provides grants, may need to hold very limited reserves or hold no reserves at all, whilst a charity employing staff and with significant activities may need to hold a high amount of reserves. The reserves policy should also include details of how often the policy will be reviewed. This should not be a static document. The charity and outside circumstances will change, and the reserves policy should be reviewed regularly to ensure that it is still fit for purpose. The accounts legislation sets out what needs to be shown in the accounts for receipts and payments accounts, and in the charity's statement of recommended practice, the SORP, sets out what needs to be shown for fully accrued accounts. However, the requirements are very similar. For receipts and payments accounts, charities need to include a description of the policy which has been adopted for the purposes of determining the level of reserves. Also required is information about the level of reserves which are currently held. So that means a comparison of the reserves held against the reserves policy. There is also a requirement to explain why any funds have been designated for a specific purpose and when these may be spent. For fully accrued accounts, again, the charity must state the policy it has for holding reserves and then also state the amount of reserves held and why. Again, there should be a comparison of the actual amount of reserves held against the amount shown in the reserves policy. In fully accrued accounts, there is a distinct requirement to state if a decision has been taken that holding reserves is unnecessary and to provide the reasons behind this. In fully accrued accounts, there are additional requirements for larger charities with income of over £500,000. So where did we see the common errors in accounts that we reviewed? In some sets of accounts, there was no information shown about the reserves policy at all. However, this was actually limited. Most charities had made some attempt to provide some statement in relation to their reserves. In many cases, there was a blanket statement that funds would be applied for charitable purposes. There was no actual reference to a reserves policy and what the charity was considering in terms of their reserves. It seemed in these instances that the charity trustees had not properly understood what was meant by a reserves policy. Where there was a reserves policy, there was often not a clear rationale behind it. So, for example, there would be statements such as the charity intends to retain 3 months of expenditure in reserves, without explaining how the trustees had arrived at that figure and why it was appropriate for that charity. Whilst we don't expect the full reserves policy to be set out in the accounts, there should be some explanation as to how the trustees arrived at the figure. In the majority of the accounts that we reviewed, there was no comparison of the actual reserves position against the reserves policy. So in the cases where a policy was stated, there was no mention of the current level of reserves that was held, how this differed from the amount set out in the policy, and what steps the trustees were taking to address the position. It appeared that in many cases, a standard statement was being made and it was not reflecting robust financial planning. Reserves policies and planning are an important part of charity governance. It is important that charities develop an appropriate reserves policy and then ensure that they are making the relevant disclosures and comparisons in the financial statements. The final key area from our sample was where charities were not following their governing document. The governing document is the set of rules the charity must follow when preparing their accounts. A charity may refer to their governing document as their constitution, trust deed, or for charitable companies, their memo and articles. Governing documents contain different levels of information and should be appropriate for the charity. It is important for charity trustees to understand the requirements of the charity's governing document. Where the governing document contains requirements which are in excess of what would be required under the legislation, then trustees must adhere to the governing document. Governing documents may include requirements for fully accrued accounts, where otherwise receipts and payments accounts could be prepared. This may be written in the governing document as a requirement for a profit and loss account, income and expenditure account, or balance sheet. Where there is a reference to any of these in the governing document, then fully accrued accounts are required. Governing documents may also include a specific financial year-end date, and some governing documents, particularly older ones, may contain a requirement for an audit of the accounts. This, at the time of writing the governing document, will likely have meant an independent check of the accounts. However, due to statutory requirements, this now means a full statutory audit is required, and that is regardless of the income level. In our review, we found that there were a number of charities who had requirements within their governing document which were not being followed. Charity trustees should review the governing document regularly. They should ensure that they understand what the rules are for the charity and that they are appropriate for the charity. As part of a good induction process, all new trustees should receive a copy of the governing document so they are all aware of what it contains. The independent examiner or auditor should also be provided with a copy of the governing document so that they ensure that they properly understand the charity and its rules. If the governing document contains requirements which are no longer appropriate for the charity, then in most cases this can be easily changed. Your governing document will set out the process by which changes can be made, and you should follow this process. Most changes only require notification to OSCR, but any changes involving the name of the charity or its purposes will require our consent. In some cases, again, particularly with older charities, there may not be a process to make changes to the governing document, and where this happens, you will need to apply to OSCR to have the governing document changed. Thank you for listening to our presentation, and we're now happy to take any questions. Thank you.
Thank you, Alison and Claire. That was really useful.